Hey, this is Bob Payne, Chief Investment Strategist here at Payne Capital Management with this week's market update. This week on the Street of Dreams, stocks broke their 5-day losing streak on Friday with a broad-based rally. However, it wasn't enough to turn the major indices into winners for the week. This weakness also meant the Santa Claus rally, where stocks typically gain in the final 5 trading days of one year and the first 2 of the next, didn't materialize. As renowned stock market analyst and creator of the Stock Trader's Almanac, Yale Hirsch, famously said, if Santa Claus should fail to call, bears may come to Broaden Wall. And so they did. As the S&P ended the week down 0.5%, the Dow lost 0.6%, and the Nasdaq fell 0.5%. It was a disappointing week, following a disappointing December when the Dow posted its worst monthly loss in more than 2 years. This almost makes you forget the major indices posted hefty gains for the year, recording a series of all-time record highs along the way. Let's not forget that last year's gains came on top of a massive move in 2023. The S&P surged 26% in 2023 and 25% in 2024, marking back-to-back returns of over 20%, something that has happened only 3 times since 1950. Now, if you're thinking three-peat, I hate to disappoint, but the S&P has experienced back-to-back returns of 20% or more for 3 consecutive years only once. Good news, however, is that historically, the market has shown a positive trend following back-to-back returns of 20% or more. On average, the index has returned approximately 10% in the year following such consecutive gains. But before we get too excited, remember the S&P 500 experienced a significant decline back in 2022, ending the year down 20%, thus reducing the average annual return in half from over 20% a year for the past 2 years to only 9% over that 3-year period. Reminding us all that good years in the stock market are invariably followed by bad years. Remember, trees don't climb to the sky. The good news for now is that up years in the markets more than make up for the down years. As history has demonstrated, every dip in the history of the markets, no matter how deep or how long, have been temporary, with new highs inevitable. So my initial advice for 2025, buy this dip so you can enjoy the inevitable rip.